Hello, everyone. Welcome back to our weekend series dedicated to price action based technical analysis. I am Sheriff Daramola, and in today's session, we will be delving into the XAUUSD chart, unveiling a straightforward trading setup to equip you for the upcoming week. In the past week, trading activities remained confined within a range-bound market structure as the uncertainty surrounding the Fed's rate cut trajectory prompted key players to adopt a wait-and-see approach, awaiting further clarity from the upcoming FOMC meeting scheduled to commence on Tuesday. It's noteworthy that the anticipation of the US Federal Reserve's easing cycle initiation might face delays owing to robust US economic data. Last week, a higher than expected inflation figures validated the Fed Chair's call for patience and maintaining the current monetary policy until the disinflation process unfolds, hereby making the path of least resistance for gold downwards. As always, we will be examining the current market structure from both technical and fundamental perspective, utilizing our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to anticipate potential price movement in the week ahead. Before we proceed, it's crucial to emphasize that this presentation is designed for educational purposes only and should not be considered financial advice. While our goal is to enhance your understanding of price action analysis, it's crucial to acknowledge the inherent risk associated with Forex trading. Exercise caution and consider seeking guidance from a professional financial advisor before making any investment decisions. With the groundwork laid, let's now dive into the details. So for this week, our first point of contact is going to be on the 4 hours time frame. So I will be skipping the daily time frame as there is nothing new on that chart, as we've been deliberating on the same market structure in the last couple of months. If you are willing to visit that my previous videos, especially if you're joining me for the first time, you can check the link in the description box below. So right here on the 4 hours time frame, what I did here was to take into consideration the character of price action since the beginning of the year, and this was what I was able to come up with. And in fact, if you look at the structure, it's very clear that price action has been bullish, as we saw in the last 4 or 5 weeks. Now we saw this impulsive move all the way to the upside, where price action hit an all-time high at the $2,195 area. Now, before I go into the details of what the structure is going to be bringing us for this week, let's quickly keep tabs with the fundamental factors that will be influencing the market sentiment at this juncture, as we are at a very crucial area where, depending on how market participants react to the structure or anticipate the events for this week, will determine how we will be positioning ourselves for the next move. So right here on the economic calendar, we are going to be focusing on high impactful event from the United States economy. And the first event we are going to be looking at for this week is coming in on Wednesday. In fact, we have a bunch of them coming up simultaneously. We have the monetary policy statement, which is a comprehensive assessment provided by the Federal Reserve detailing the economic outlook and the rationale behind monetary policy decisions. We are also going to be having the FOMC economic projection. We are also going to be having one of the major events for the week, the Fed interest rate decision, which also is coming up simultaneously at that time. So during this time, we are going to get to know the outcome of the Federal Reserve's meeting, where they decide whether to change or maintain the current interest rate based on the data we've been seeing from that economy in the last couple of weeks. Then finally on that day, we will be looking forward to the FOMC press conference, which is a regular event where the Fed chairman communicates the central bank's monetary policy decisions, economic outlook, and answer questions from the media. Now fast forward to Thursday and Friday, March 21 and 22 respectively, we will be witnessing the S&P Global publication on service and manufacturing PMI, and this data here will give us a key insight into the health and performance of the service and manufacturing sector of the US economy. So these are the high impactful events we will be looking forward to for this week. Now scaling back down into the 4 hours time frame, you will see that we are at a crucial juncture. And to guide my trading decision for this week, I've been able to identify a key level at the $2,155 area, which you will see here has played a major role in negating all attempt by the sellers to push price to the downside. As you will see, every attempt by sellers to drop below the structure has been met with strong resistance from the buyers, as you will see here. Now at the end of last week, price action is back into the structure, closing right around that area. You will agree with me that we are at a crucial juncture at this point in time, where depending on how participants in the market react to this key level will determine how we will be positioning ourselves for the next move. We all understand that at the culmination of each impulsive leg, as you will see here, remember this impulse leg started somewhere in the month of February, I think. Let's see. Yes, in the month of February, as you will see here, it started around there, all into that all-time high. And whenever we have this kind of impulse leg, it gets to a distinctive phase which emerges, serving as a precursor, signaling the forthcoming conclusion of the leg and the initiation of a retracement movement. Now this pivotal transition marks a critical juncture where traders anticipate a potential shift in sentiment and market direction. And as you will see, gold has reached an all-time high. The prevailing sentiment of fear looms large, hinting at a possible downturn in prices, especially after considering the sticky inflation in the United States. So it is imperative to remain vigilant and well prepared for this impending shift to navigate the current market dynamics effectively. So at this point in time, I'm beginning to suspect that we may likely be seeing price action drop to the downside in an attempt to retrace this impulsive move we saw here. And if we look at the structure, we may be looking at a TP target between the $2,090 level and the $2,065 area, which beautifully shares a confluence with that ascending trend line, and we are going to be looking at a minimum of 650 pips to a maximum of 950 pips to catch here if price action drops to the downside. However, if the contrary is what happens here and instead price continues to climb new highs, then this whole structure we have here may evolve into an uptrend continuation pattern where the breakout of the resistant line of this pattern will be all we need to continue the uptrend move to the upside. So you will agree with me that we are at a crucial juncture in this market where, depending on how market participant reacts to the structure here, will determine what our next line of action will be for this week. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. If you have found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you'll always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.